Let me start with a bitter truth. 90% of people will never be rich, not because they lack intelligence, but because they lack patience. The average person wants results faster than compounding can deliver them. They confuse activity with progress, income with wealth, and excitement with success. That's why most people never get rich. Wealth isn't built by chasing, it's built by waiting. And most people can't stomach the boredom that waiting requires. They sabotage themselves by interrupting the very process that would have freed them. I've watched smart men destroy their financial lives, not because they were wrong, but because they were restless. The world rewards those who can think long term when everyone else is panicking short term. And there's a psychological law that decides your financial fate. One almost no one understands. You see, the real problem isn't that people don't make money, it's that they don't keep it. Most live trapped in a financial illusion, confusing income with wealth. They climb the salary ladder only to find themselves in the same place, living paycheck to paycheck, drowning in lifestyle debt, terrified of standing still. They tell themselves they're doing fine because the house looks nice and the car is new. But wealth isn't what you show, it's what you can't see. Discipline, not income, builds freedom. And that's why so many stay poor. They chase appearance, not substance. They buy comfort and call it success. Money without discipline creates invisible poverty. You feel rich while quietly becoming fragile. But a small fraction escape this trap entirely. What's their secret? There's one defining trait that separates them from everyone else. I've watched it happen thousands of times. A man earns more, spends more, and calls it progress. He convinces himself he's living well when really he's living trapped. Every paycheck is already spoken for before it arrives. The house, the car, the gadgets, they own him. That's the cost of short-term thinking. The quiet, invisible suffering of a person chained by their own habits. You don't feel the pain all at once. It builds slowly, disguised as comfort, until one day you realize you've traded decades of freedom for the illusion of stability. Most people think they have a money problem. They don't. They have a discipline problem, a refusal to delay gratification long enough to let compounding work. And the tragedy, even intelligent people fall for it, because there's a psychological trap so subtle, it fools the smartest minds. I've lived long enough to see thousands of smart people remain poor, and a few ordinary ones become unbelievably wealthy. The difference wasn't luck or IQ. It was how they thought. Not what they knew, but how they structured their thinking over time. See, money doesn't make you rich, discipline does. And discipline isn't about effort. It's about patience married to clarity. The ability to understand what matters, to wait for it, and to do nothing while the rest of the world goes insane. That's where 90% of people fail. They can't stand still long enough for compounding to reward them. They chase trends, switch strategies, and abandon their plan the moment boredom or doubt sets in. They crave excitement, and excitement kills compounding faster than stupidity ever could. The people who win, the ones who quietly build generational wealth, all have one thing in common. They've built a mental model for time. They understand the physics of patience, the psychology of time. Here's the paradox. Wealth creation looks like inactivity. From the outside, it's uneventful. No fireworks, no breaking news, no drama. But underneath, there's a quiet revolution happening every day, one decision compounding on another. When I say compounding, most people think of interest rates or stock returns. They miss the deeper truth. Everything compounds. Knowledge, habits, trust, discipline, they all follow the same curve. But to benefit from compounding, you must give it what it needs. Most time and stillness. Most people can't do that. Their minds are addicted to novelty. They want change when what they really need is repetition. That's why I call patience a superpower of the rational mind. It looks passive, but it's the hardest active discipline in existence. You see, the rich think in decades, not days. The poor think in hours. The middle class thinks in months. But the wealthy build mental models that stretch across generations. They understand that compounding doesn't just grow wealth, it transforms identity. It changes who you are, how the rich think differently. When you study how the rich think, you notice something curious. Their worldview is quiet. They don't chase hype, they look for laws that don't change. They prefer predictable boredom to unpredictable excitement. I once told a young investor, if your portfolio doesn't bore you're doing it wrong. The same applies to life. The rich get richer not because they're smarter, but because they structure their decisions to minimize stupidity. They think in terms of systems, not goals. Let me show you how this looks in practice. Most people make a decision based on emotion. I feel confident, so I'll invest. I feel afraid, so I'll sell. I feel bored, so I'll try something new. That's the mental operating system of 90% of humanity. Emotion first, logic later. The rich invert that. They think like engineers. What rule governs this situation? What would this look like if I repeated it 1,000 times? What's the downside if I'm wrong? Their decisions are pre-engineered for survival. That's why their results compound, because they don't keep starting over. The mental model of rational patience. Let's talk about how this patience actually works as a mental model. Patience is not laziness. It's strategic restraint. It's the discipline to let compounding run while you stay out of its way. When you plant a tree, you don't dig it up every week to check the roots. Yet, financially, that's exactly what most people do. They interrupt compounding by overmanaging, overtrading, and overreacting. The rich learned a simple truth. You can't improve what time is already perfecting. That's the paradox of wealth building. The less you interfere, the faster it grows. But interference feels productive, and stillness feels scary. So most people choose comfort over clarity and pay the price in lost decades. Charlie Munger once said, the big money is not in the buying or the selling, but in the waiting. He wasn't exaggerating. That one principle explains 80% of Berkshire Hathaway's returns and 100% of their survival. The math behind this is astonishingly simple. Let's say your investments grow at 10% per year. That doesn't look impressive until you don't touch it for 25 years. Then the compounding curve takes over and what looked small becomes unimaginable. The same applies to mental capital. If your understanding improves by just 1% each month, it compounds into exponential clarity in a decade. But if you restart, chase every new trend or theory, you destroy that curve. That's why I always say wealth is built in the mind, long before it appears in the account. The emotional trap. Now here's the hidden enemy, the one that quietly kills more wealth than any recession: impatience, disguised as intelligence. People tell themselves stories like, I'm optimizing, I'm being proactive, I'm making my brick, money work harder. What they're really doing is interrupting compounding because they're uncomfortable with boredom. Impatience wears the mask of progress. It makes you feel productive while destroying your future. That's why I often say boredom is the signal that compounding is happening. Our play. The world has trained you to hate boredom, but boredom is the space where mastery grows. It's where long-term clarity develops. That's why the rich don't just tolerate boredom, they weaponize it. They've built mental models that turn stillness into progress. How mental models protect wealth. Mental models are like filters. They keep noise out and truth in. The right model helps you make better decisions automatically. Here's how they work in practice. The compounding filter. Before acting, ask, will this decision interrupt or accelerate compounding? If it interrupts, don't do it. The time filter asks, if I repeated this behavior for 20 years, what would happen? That eliminates impulsive thinking. The inversion filter asks, what would guarantee failure here? Then simply avoid those behaviors. These three filters turn patience into a system, not a mood. They protect you from the emotional turbulence that destroys wealth. Because here's the truth. Wealth isn't built by people who know what to do. It's built by people who know what not to do. The paradox of simplicity. People overcomplicate money because complexity makes them feel smart. But wealth rewards simplicity. The rich don't waste mental energy chasing predictions. They focus on principles that survive time. Spend less than you earn. Invest what you save. Wait longer than everyone else. That's it. 3 rules. But those rules are unbearable for most people because they require patience, humility, and self-control, 3 traits the modern world systematically destroys. The rich build those traits into their mental operating systems. They automate good behavior. They treat wealth building like gravity, a natural law, not an emotional adventure. And that's the irony. People chase complexity, looking for control, when in reality, control comes from surrendering to simplicity. Delayed gratification as a skill. Patience is not genetic, it's trained. I wasn't born patient. I became patient by watching what impatience costs. Every time I rushed, I paid a tuition fee to the market. Every time I waited, I earned compound interest on my judgment. Delayed gratification is the ability to tolerate temporary discomfort in exchange for permanent leverage. It's the opposite of modern behavior. Everyone wants shortcuts. No one wants character, but compounding doesn't care about your feelings. It only rewards consistency, the feedback loop of rational thinking. Here's what happens once you internalize patience as a mental model. You stop competing with others and start compounding internally. You stop chasing opportunities and start letting opportunities chase you. You stop overestimating intelligence and start overvaluing endurance. And once this loop starts, it feeds itself. Each rational decision creates a little more peace. Each peaceful moment strengthens your rationality. That's the positive feedback loop of wealth. But here's the catch. You have to survive long enough for the feedback loop to take effect. Most people self-destruct before that point because they can't tolerate slow progress. Munger once said, "It's not supposed to be easy. Anyone who finds it easy is stupid." He meant that compounding tests your character, not your intellect. What separates the few from the many? The few who master patience don't live by trends. They live by laws of nature. They understand that wealth behaves like water. It flows toward those who can hold it without spilling. Most people spill constantly through envy, fear, or ego. The wise build reservoirs, not funnels. They build systems, not reactions. And here's the strange twist. Once you truly learn to wait, you'll realize waiting is an active process. It's observation, calibration, and quiet conviction. It's being still while thinking deeply. The longer you wait intelligently, the more opportunities you attract, because time filters out fools. That's how the rich quietly widen the gap every year, not through risk-taking, but through risk avoidance. The invisible law of wealth. Everything I've said so far points to one inescapable truth. Wealth creation is governed by a psychological law, the law of rational compounding. It rewards those who align their behavior with time and punishes those who fight it. Once you understand this law, you'll never need luck again, because luck only matters in short-term games. Compounding is the long-term game. When you master it, everything slows down. You stop chasing. You stop envying. You start seeing what others can't. That time is the ultimate investor. So now you see it. Wealth isn't a secret formula or a rare opportunity. It's a psychological design. It's built by a mind that can wait, a temperament that can withstand boredom, and a system that compounds clarity faster than emotion can destroy it. And once you master that architecture, wealth becomes inevitable. But this still leaves one question, one every investor, thinker, and dreamer must face. If the secret is patience and compounding, then what is the mental law that guarantees riches to the patient? That's what we'll uncover next. Let me tell you something that took me 50 years to truly understand. Money isn't what compounds wisdom does. Every dollar you earn or lose is just a reflection of the quality of your thinking. And if your thinking improves faster than your spending impulses, your wealth becomes inevitable. People love talking about compound interest, but few ever talk about compound intelligence, the gradual, invisible growth of judgment that makes money stick. Because the truth is, money will always follow clarity. It runs away from confusion like a scared animal. You don't need more luck or even more opportunities. You need a better mental operating system. And that system is built around one principle. Thoughts compound like capital when guarded from stupidity. That's not philosophy, that's mechanics. The law of mental compounding. Here's the irony. The formula for getting rich is simple, but following it requires a lifetime of discipline. It's not about making one brilliant move. It's about avoiding 1,000 stupid ones. Most people treat learning like a checklist. They read a book, watch a video, and think they've grown wiser. But knowledge that isn't applied, tested, and integrated doesn't compound, it evaporates. Munger's approach was different. He didn't just collect information, he collected filters for information, mental models that allowed him to see reality as it truly was. He understood that each new, accurate idea became a permanent asset, earning interest every time he made a decision. That's why I call it mental compounding. Every truth you discover adds to the principle of your judgment, and every foolish reaction you avoid prevents the balance from declining. You can't see it, but you can feel it. The widening gap between those who think carefully and those who think casually. Clarity is capital. In the financial world, we measure wealth in dollars. In the intellectual world, we measure it in clarity. And just like money, clarity compounds. Each year you think a little more clearly. Every decision you make becomes slightly better than the last. That improvement doesn't add up, it multiplies. That's why I say clarity is the rarest form of capital. It doesn't depreciate with time, it appreciates. When you train your mind to see the world accurately, without emotion, envy, or ego, you've built a machine that mints correct decisions automatically. That's what the rich have done, often without realizing it. They don't outsmart the market. They outlast everyone's confusion. The wealth gap you see in the world isn't really about money. It's about clarity, the mathematics of rational wealth. Let's make this tangible. Imagine you start with 1 unit of rationality, call it R. Each year, you improve your judgment by just 1%. After 30 years, that doesn't look dramatic until you realize 1 to the power of 30 equals 35. That's a 35x improvement in clarity. Now imagine someone whose thinking degrades by 1% each year because of ego, envy, or distraction. The difference between those two people isn't 9%, it's infinite. One is compounding truth, the other is compounding delusion. That's why the rich get richer and the poor stay reactive. The compounding isn't just in their portfolios, it's in their psychology. Every rational act multiplies future rationality. Every emotional reaction multiplies future stupidity. That's why I say wealth is the reward for surviving your own bad impulses long enough for clarity to pay off. Mental interest rates. Now, let's talk about something I call mental interest rates. Every decision you make earns or costs you cognitive interest. The return depends on one variable, the quality of your thought process before you act. If you think clearly, you earn positive interest, better results, more trust, more opportunities. If you think emotionally, you pay negative interest, mistakes, regret, and erosion of reputation. Every day, you're either growing your balance of rationality or depleting it through impulsiveness. The rich have higher mental interest rates because they've eliminated friction, emotional drag, envy, impatience. That's why their thinking scales across decades without burning out. Meanwhile, the average person's mental balance sheet is full of liabilities, distractions, fear, self-deception. They spend all their attention on the urgent instead of the important. You can't build wealth with a mind that spends faster than it earns clarity. Guarding against stupidity. The first rule of compounding wisdom is to protect the principle. That means avoiding stupidity at all costs. Because one stupid mistake can reset years of compounding. Munger once said, "It is remarkable how much long-term advantage we have gotten by trying to be consistently not stupid." He didn't say consistently brilliant. He said not stupid. Brilliance is fragile, but avoiding stupidity is sustainable. That's why he focused his energy not on being clever, but on building filters to prevent foolishness. Avoid debt you don't understand. Avoid people who inflate your ego. Avoid urgency that hijacks your judgment. Avoid complexity that hides risk. These aren't just moral rules. They're protective algorithms that keep compounding uninterrupted. The power of intellectual discipline. Let me give you a simple analogy. Imagine two investors. One compounds his capital. The other compounds his confusion. Investor A reads deeply, thinks slowly, and filters ideas through. First principles. Investor B skims headlines, follows trends, and acts on emotion. After a decade, Investor A's understanding is a cathedral stable, layered, and timeless. Investor B's is a tent shaky, shallow, and full of leaks. That's what mental compounding does. It builds intellectual architecture that survives storms. The market rewards Investor A, not because he's lucky, but because he's durable. His clarity compounds, even when the world panics. That's the true Charlie Munger rule: build judgment that outlasts volatility. The currency of judgment. You want to know what the most valuable currency in the world is? It's judgment. Judgment is the invisible capital that determines the return on everything else you touch: money, relationships, health, business. Without sound judgment, more resources just multiply chaos. With sound judgment, even scarcity compounds. That's why Munger and Buffett avoided over-diversification. They didn't need 100 bets. They needed 5 good ones, because their judgment was refined enough to identify them. If your mind compounds accurately, your world doesn't need to be complicated. Simplicity becomes leverage. That's the essence of what I call wealth thinking. It's not about collecting assets. It's about reducing stupidity per decision. The flywheel of rational wealth. Here's the sequence that every rational investor and every wise thinker eventually discovers. Learn deeply. Understand principles that survive time, not fads that fade. Apply selectively. Choose fewer, higher quality decisions. Reflect honestly. Learn from errors without ego. Repeat endlessly. Each loop doubles your clarity. Each repetition increases your compounding rate. That's the flywheel of rational wealth. Once it starts turning, it feeds itself. Every success reinforces patience. Every mistake refines precision. Most people never reach that stage because they quit before the flywheel gains momentum. They don't realize compounding feels slow at first, painfully slow. Then, one day, it feels inevitable. That's the day compounding stops being math and starts being identity. Identity transformation. True wealth isn't something you earn, it's something you become. You evolve from an emotional participant into a rational observer. You stop playing the game everyone else is obsessed with and start mastering the one that matters: time. Wealth, at its highest form, is the ability to let reality work in your favor without interference. That's why I laugh when people talk about getting rich fast. Fast wealth is fragile. Slow wealth is eternal. If you can't delay gratification, you'll never experience compounding. And if you can't think long-term, you'll never sustain it. That's why every great investor eventually sounds boring, because the truth, when mastered, is calm. The big idea, the law of rational compounding. Now, let's connect everything. The rich aren't rich because they found a secret opportunity. They're rich because they live by a secret law, the law of rational compounding. It works like gravity. It's always there, always pulling in your favor, as long as you don't fight it. Each clear thought adds to your base. Each foolish reaction subtracts from it. Each patient decision multiplies the base exponentially. You don't need to be faster, louder, or braver. You need to stay in the game long enough for time to do the arithmetic. The market, the world, and even your own mind will always test your patience. But once you see compounding for what it truly is, the mathematics of reason over time, you'll never play short-term games again. Most people measure wealth in numbers. I measure it in peace of mind, because peace is the dividend of rationality. The richer you become in clarity, the less chaos you attract. And eventually, your life compounds exactly like your capital, quietly, predictably, and beautifully. That's the big idea. The mathematics of rational wealth isn't about adding more. It's about subtracting stupidity and multiplying time. And if you do that long enough, your results, financial and otherwise, become inevitable. But the real question is, if this law is so obvious, why don't people follow it? The answer lies in what destroys it, the inversion principle. Let's strip all the mysticism away and get mechanical. You already understand the philosophy of compounding. Now I'll show you how it works mathematically, psychologically, and behaviorally. It's not magic. It's the arithmetic of behavior. The reason 90% of people never get rich isn't that they don't know what to do. It's that they don't know how compounding actually happens. They treat success like a series of random wins instead of a chain of related decisions feeding each other over time. The rich don't make 10,000 brilliant choices. They make a few intelligent ones they never undo. That's how compounding works in both money and thought. The fewer resets you make, the faster the curve bends upward. Every impulsive act is a reset. Every patient decision extends the curve. The law of decision compounding. Here's the basic formula. Wealth equals decision quality times the emotional interference. If you improve the quality of your decisions by 1% per month and protect them from emotional interference, your returns grow exponentially. But if you let impatience, fear, or ego interrupt that process, you flatten the curve. This is the mathematics of rational wealth. In finance, a 10% return compounded for 30 years turns $1 into $17.45. But in life, a 10% improvement in decision quality compounded for 30 years turns mediocrity into mastery. The math is identical. The variables are mental. The mental compounding chart moment. Visualize this. On the left side of the chart are two curves, rational thinker and emotional thinker. At year one, they're identical. The rational thinker makes decisions slowly, avoids stupidity, and accepts boredom. The emotional thinker chases excitement, reacts quickly, and seeks validation. Year after year, the rational thinker's curve rises smoothly. The emotional thinker's curve rises and crashes repeatedly. By year 10, rational is twice as far. By year 20, the difference is tenfold. By year 30, the gap looks impossible, not because the rational thinker worked harder, but because he stopped restarting. That's the invisible math that creates billionaires and bankruptcies alike. Wealth isn't the result of intensity, it's the reward for staying unbroken. Decision quality is a compounding asset. Most people believe money compounds. I'll tell you what actually compounds. Decision quality. Every high-quality decision creates a ripple effect of better future decisions. It increases your experience, your understanding of risk, your patience, and your resilience. If you want to invest like Charlie Munger, stop focusing on predictions and start focusing on decision structure. Ask yourself, did I think clearly before acting? Did I analyze incentives correctly? Did I avoid ego in my reasoning? Every yes compounds your mental capital. The market doesn't reward intelligence, it rewards consistency of reason. That's why some people can be average thinkers and still win spectacularly, because they make fewer unforced errors. Delayed gratification, the amplifier of returns. Let's introduce the amplifier delayed gratification. It's the hidden multiplier in every compounding system. You can't compound anything capital, reputation, or wisdom without the ability to delay pleasure. When you delay gratification, you create temporal leverage. You trade a small, certain pleasure now for a massive, uncertain payoff later. That's the psychological version of interest. The math is brutally fair. The impatient earn linear results. The patient earn exponential results. Most people can't tolerate that waiting curve. They confuse inactivity with inefficiency. But compounding rewards those who can endure the illusion of slowness. That's why patience isn't passive, it's precision. The emotional tax on compounding. Every emotional decision is a withdrawal from your mental account. You might not see the cost immediately, but it always shows up later in regret, wasted time, or lost opportunity. I call it the emotional tax. Impulse costs you compounding time. Envy costs you focus. Fear costs you opportunity. The rich minimize these taxes by building emotional systems, not by relying on willpower. They automate patience. They have rules that override feelings. That's how you sustain compounding long enough for it to show results. Think about it. Even the best investment strategy collapses if you panic once every 5 years. One panic can erase a decade of discipline. The same applies to life decisions. One emotional overreaction can undo years of rational effort. The system behind Munger's calm. I've met countless investors who confuse composure with confidence. Munger's calm wasn't confidence, it was systematic rationality. He built mechanisms that removed the need for emotion altogether. He read daily to reduce uncertainty. He avoided leverage to reduce stress. He partnered with Buffett to reduce ego. Each choice increased his mental interest rate. He didn't need to feel brave. His system made bravery unnecessary. That's why I often say, you can't trust a mind that depends on emotion for discipline. Rational wealth builders design environments where the right decision becomes automatic. The pattern loop. Boredom, consistency, wealth. There's a predictable loop to compounding behavior. Boredom. Compounding always begins dull. Nothing seems to be happening. Consistency. You stay the course because you understand the math. Wealth. The results explode suddenly, but only for those who endured phase one. Most people never make it past boredom. They want excitement. So they switch systems, chase trends, or optimize the process that's already perfect. That's why they reset their curve right before exponential growth begins. The rich know better. They turn boredom into a moat. If you can tolerate monotony, you can outperform almost everyone. Why decision quality multiplies wealth. Let's look at this from a practical angle. Every decision you make either expands or contracts your range of future options. Good decisions increase optionality. They give you more ways to win later. Bad decisions decrease it. They box you in. The difference between the rich and everyone else is that they preserve optionality. They make decisions that leave doors open. They buy time, not just assets. That's why patience pays so handsomely. It keeps options alive while others panic and close theirs. If you study any billionaire, you'll notice they rarely make decisions under pressure. They don't need to. They created systems where pressure can't reach them. How to apply the mechanism. You don't need to be a genius to apply this. You just need to install a few mental algorithms that protect compounding. Here's the mechanism in practice. Define your circle of competence. Only play games you understand. Knowledge compounds inside boundaries, not beyond them. Eliminate resets. Avoid impulsive career changes, portfolio churn, or emotional pivots. Compounding hates inconsistency. Measure decisions by reversibility. If a decision can ruin you, it's not worth the upside. Build patience into process. Pre-commit to long holding, periods, silent learning phases, and slow judgment. If you do just those 4 things, your life will look boring for years and extraordinary after. That's the exact playbook Buffett and I used. Nothing fancy, just years of avoiding stupidity faster than others could recover from it. The real luck of the rich. When people say they got lucky, what they're actually seeing is compounded decision quality. Luck may start the race, but behavior finishes it. The rich create their own luck by surviving long enough for probabilities to tilt in their favor. They eliminate the downside so ruthlessly that the upside becomes inevitable. It's not luck, it's statistical patience. That's what invest like Charlie Munger really means. Not to imitate his portfolio, but to imitate his temperament. The inescapable law. By now, you see the mechanism clearly. It doesn't matter if we're talking about money, marriage, or mastery, the law is the same. The quality of your decisions compounds faster than your income ever will. The rich protect that compounding. The poor interrupt it. That's why the gap keeps widening. Not because the rich are evil, but because they're patient. Patience scales, emotion destroys. It's not dramatic, it's arithmetic. So when you hear someone complain that the system is rigged, they're right, but not in the way they think. The system is rigged in favor of patience, logic, and time. And the reason 90% ignore this law is simple. They don't want truth, they want thrill. They'd rather feel rich today than be rich tomorrow. That's why they keep resetting their curve, and why compounding keeps rewarding the few who can wait. In the next section, I'll show you how we use inversion, the art of identifying what not to do to make this system foolproof. Because to stay rich, you must first learn how not to go broke. If you want to become truly wise and stay rich once you get there, you must learn to think backward. Most people spend their entire lives asking, what should I do to succeed? That's the wrong question. The right one is, what would guarantee failure? I've said it for decades. Invert. Always invert. When you turn a problem upside down, the fog clears. You see the landmines instead of the shortcuts. You discover that success is rarely about brilliance, it's about survival. And survival is about avoiding stupidity faster than others can recover from it. I've met geniuses who went broke, and simple people who died wealthy. The difference wasn't knowledge. It was restraint. That's why I call inversion the mathematics of wisdom. It subtracts risk before it adds reward. The foolproof law of inversion. Here's the simple rule. If you want to succeed, first identify everything that guarantees failure and stop doing those things. Because the road to poverty is well paved and predictable. And yet, most people sprint down it enthusiastically. They envy. They over-leverage. They seek excitement. They ignore risk. And they forget history. It's astonishing how consistent human stupidity is. Let's walk through the main traps. Each one is a wealth killer, and avoiding just one can change the trajectory of your entire life. 1. Envy, the tax that never sleeps. I've seen envy destroy more fortunes than inflation, recession, or regulation combined. It poisons clear thinking. The moment you start measuring your life against someone else's highlight reel, you start making irrational moves. You overextend to catch up. You invest in things you don't understand because someone richer mentioned them at dinner. You start competing, not compounding. Envy is the opposite of rationality. It's emotion disguised as ambition, and it ensures you'll always act on impulse instead of logic. I've always said envy is the most stupid of all sins because it brings no joy, only misery. If you can't admire success without resenting it, you'll never create your own. The rich learn from those ahead of them. The poor compete with them. 2. Leverage without skill. The fastest route to ruin. Leverage isn't evil. It's neutral. It magnifies whatever you already are. If you're rational, it amplifies your wealth. If you're foolish, it amplifies your destruction. People see leverage as power. I see it as a magnifying mirror. If you don't understand your own psychology, leverage will expose it in brutal HD. In my lifetime, I've watched brilliant people blow up entire fortunes because they borrowed money to accelerate what should have been slow. They mistook speed for intelligence. Munger's rule is simple. Never use leverage in a game you don't fully understand. If you can't survive being wrong, you have no business being confident. Most financial deaths come not from ignorance, but from arrogance. 3. The addiction to excitement. The market rewards boredom and punishes thrill-seeking, but humans are wired to chase novelty. That's why most investors behave like gamblers, not because they love risk, but because they hate silence. The rich understand that excitement is the enemy of endurance. They know that compounding thrives on dull repetition. If your financial plan feels thrilling, it's probably wrong. You'll see this everywhere in life, business, investing, even personal habits. Most people can't tolerate monotony long enough to reap exponential rewards. They need stimulation, so they trade consistency for chaos. But compounding only works for those who don't interrupt it. And excitement is interruption disguised as momentum. Remember this. Boredom is not a weakness. It's evidence you're on the right track. 4. Ignoring risk until it's too late. The biggest risk in life is not knowing what you're doing. People underestimate how fragile they are. They think survival is guaranteed because they've done their research. Then one storm hits a bad market, a health issue, a crisis, and their whole structure collapses. I've built my life around avoiding fragility. That's why I never use complex debt structures or speculative leverage. I'd rather earn 10% safely for 50 years than gamble for 100% once. You can't compound if you're constantly rebuilding. So the wise design systems that assume the worst, not hope for the best. They understand that resilience is the highest ROI in existence. 5. Lifestyle inflation, the silent killer. Here's one nobody likes to talk about. The richer people get, the poorer they feel. Because as income rises, expectations rise faster. Lifestyle inflation is the quiet thief of compounding. You start rewarding yourself with comforts that quietly enslave you: bigger houses, flashier cars, unnecessary obligations. Every new indulgence becomes a new expense, a new dependence, a new pressure. Before long, your wealth is cosmetic and your freedom is gone. I've seen millionaires trapped by their own lifestyles, working harder than ever just to maintain appearances. They're not free, they're decorated prisoners. To stay rich, live like you could lose everything tomorrow. That humility compounds faster than arrogance ever will. 6. Cognitive decay, the refusal to keep learning. The moment you stop learning, you start decaying. Knowledge is like oxygen, invisible, essential, and easy to take for granted. Munger's greatest wealth wasn't in dollars, but in mental models. He spent decades cross-training his mind across disciplines: physics, psychology, biology, history. That's how he built what I call latticework clarity. The more diverse your knowledge, the fewer stupid mistakes you make. And avoiding stupidity is the ultimate compounding strategy. The poor stop learning the moment they feel comfortable. The rich never stop learning because they know the cost of ignorance compounds too. Every new insight is an insurance policy against future error. The poverty equation. Now, if you invert everything I've just said, you get a perfect formula for financial misery. Poverty equals envy plus leverage plus excitement plus ignorance plus lifestyle inflation times ego. That equation explains almost every financial failure in human history. Each term feeds the other. Envy drives you into debt. Debt creates risk. Risk drives emotion. Emotion fuels stupidity. And stupidity resets your compounding curve. Do this long enough, and even the smartest person can end up broke. The math doesn't care about your intentions. It only rewards those who stop interrupting compounding. The checklist of avoidance. Here's a checklist. I use my personal anti-stupidity manual. Read it once a month. Live by it every day. Avoid leverage you don't control. Avoid envy at all costs. Avoid emotional decisions. Avoid urgency. Avoid complexity when simplicity works. Avoid people addicted to drama. Avoid the illusion that you're smarter than probability. If you can follow even half of those rules for 50 years, you'll be wealthier financially and mentally than almost everyone you know. Because what ruins people isn't ignorance, it's overconfidence and bad habits. Why fear is a friend? I don't fear markets. I fear human nature. Because human nature never changes, it only reinvents excuses. Fear, used correctly, is rational armor. It keeps your ego in check. It reminds you that reality doesn't care about your opinions. It's not cowardice to fear stupidity, it's wisdom. I've said for years, it's remarkable how much long-term advantage we have gotten by trying to be consistently not stupid. Fear, properly calibrated, keeps you within the boundaries of compounding. The goal isn't to be fearless, it's to fear the right things. The cynical truth. Let me be blunt. The world punishes arrogance and rewards humility. Most people lose money not because they're unlucky, but because they're arrogant enough to believe the rules don't apply to them. They think they can time the market, outthink risk, and shortcut patience. And the market always wins. Always. I've survived this long because I never assumed I was smarter than the laws of time and behavior. That's what keeps me sane and solvent. From inversion to wisdom. Now that you've seen what destroys wealth, you can probably guess what preserves it. It's not brilliance, it's restraint. The goal isn't to find genius moves, it's to build a life where one mistake can't ruin you. When you master inversion, you stop chasing how to get rich and start asking, how do I make sure I never go broke? That shift from offense to defense is where true wealth begins. Because once you protect the downside, the upside takes care of itself. That's why inversion isn't just a trick. It's the foundation of all rational thinking. And yet, knowing what not to do is only half the game. The real question remains, if avoiding stupidity is survival, what do the wise actively do instead? I've lived through wars, recessions, bubbles, and mania, and the same lesson repeats every decade. Human nature doesn't change. Markets change. Technology changes. But people, they make the same emotional mistakes with fancier tools. When I was a young man, I believed intelligence could protect me from error. I was wrong. Intelligence amplifies error when combined with ego. Wisdom, on the other hand, dilutes ego. It teaches you humility before the market teaches it to you violently. That's why I stopped chasing cleverness decades ago. I started chasing clarity, because clarity, when sustained, compounds into something far rarer than wealth, peace of mind, the authority of experience. You can read every finance book ever written, but experience writes in a sharper ink. I've seen men with perfect resumes crumble because they couldn't control their emotions for 10 minutes. And I've seen quiet, unassuming people build empires because they did one thing the rest couldn't. They waited. You don't need a high IQ to master this game. You need emotional stamina. The ability to do nothing when others are losing their minds. That's the real genius. The Stoics knew this centuries before Buffett and I were born. Epictetus said, wealth consists not in having great possessions, but in having few wants. That's not philosophy. That's financial engineering. Every dollar you don't spend compounds into power. Every impulse you control multiplies your future options. Wisdom, at its core, is delayed gratification applied across time and emotion. The lessons from Buffett. Warren and I built Berkshire on a principle so simple it sounds ridiculous. Find good businesses, buy them at fair prices, and never sell. That's it. No secret formula. No algorithm. Just a 60-year test of human patience. People call it genius. It's not. It's restraint. Our edge wasn't picking stocks, it was avoiding stupidity. We ignored Wall Street's noise, refused to speculate, and turned boredom into our moat. Buffett once said, the stock market is a device for transferring money from the impatient to the patient. And that's not just about stocks, it's about life. Every arena of life transfers advantage to those who can sit still while the rest panic. The calm behind compounding. Most people think success feels like excitement. It doesn't. It feels like silence. It's the calm you earn after decades of rational discipline. It's the ability to look at volatility and say, this too shall pass. When you reach that point, compounding becomes effortless, not because the math changes, but because you do. Buffett and I call it temperamental wealth. It's the stage where your emotions no longer control your outcomes. It's also the most powerful form of wealth because no market crash, no headline, no panic can take it away. Historical proof of rational discipline. People forget this, but during the 1,970 seconds, when inflation was raging and panic ruled the streets, Berkshire wasn't spared. Our portfolio took heavy hits just like everyone else's. But we didn't flinch. We didn't reposition. We didn't chase trends. We simply kept doing what worked. Buying great companies, thinking in decades, and letting compounding work in silence. By the 1,980 seconds, that calm had turned into momentum, the kind that doesn't reverse. And that's when I realized something deeper. You don't win by being smarter, you win by being unshakable. That's a lesson every generation must relearn. Why authority comes from endurance. Wisdom isn't the ability to predict outcomes. It's the ability to survive uncertainty with dignity. That's why the market rewards temperament more than intelligence. The hotshot analyst with perfect models will still panic when the screen turns red. The wise investor will yawn, pour a cup of coffee, and read history. Because history repeats itself, not in detail, but in behavior. The names change. The greed doesn't. The technologies change. The fear doesn't. The assets change. The psychology doesn't. That's why I built my life around principles that don't expire. And that's what makes authority sustainable, not charisma, not popularity, but consistency across decades. The Charlie Munger lesson. People often ask me, Charlie, what's your secret? There is no secret. The trick is to think in systems, not snapshots. I learned early that the mind is like an investment portfolio. You must prune it ruthlessly. Every time you remove a bad habit, a poor assumption, or a false belief, your mental returns improve. That's compounding at the cognitive level. When you stop seeking certainty and start seeking clarity, everything changes. You stop asking, will this make me rich? And start asking, will this make me wiser? And the irony is the latter question eventually makes you richer, because money follows wisdom, not the other way around. The Stoic core of enduring wealth. There's a reason I often quote the Stoics. They solved the psychology of investing long before modern finance existed. Seneca said, he is a great man who uses earthenware dishes as if they were silver, and silver as if they were earthenware. That's balance. That's detachment. That's wealth. If you can enjoy simplicity and endure luxury without changing your temperament, you've mastered both money and mind. The Stoics didn't measure wealth in possessions, but in control over one's impulses. And that's the same metric I've used my entire life. Rational wealth isn't about what you can buy. It's about what you can ignore. Building a legacy of thinking. When you live long enough, you begin to realize that compounding applies to everything, even to ideas. Each generation inherits the thoughts of the last. The question is, do they dilute it or refine it? That's why I share what I've learned, not to preach, but to preserve, to remind the next generation that all progress begins in thought and all failure begins in emotion. I never wanted to be remembered for being rich. I wanted to be remembered for being rational, because rationality, once multiplied across time, becomes civilization itself. The authority of humility, true authority, doesn't shout. It doesn't sell. It doesn't demand to be believed. It simply endures long enough to prove itself. I've watched trends rise and fall. Gurus come and go. But principles, the real ones, never age. Humility keeps you aligned with truth. Arrogance disconnects you from it. That's why Buffett and I built our empire with quiet conviction, not noise. We were never trying to impress the world. We were trying to outlast it. And the irony? That's exactly why the world began listening. The bridge to the next generation. If I could speak directly to you, the investor, the thinker, the student, watching this, I'd tell you this. Stop trying to look smart. Start trying to stay sane. Stop chasing opportunity. Start chasing clarity. Stop trading time for status. Start trading it for freedom. Because wealth without freedom is just another form of debt. And clarity, the kind that comes from patience, discipline, and inversion, is the only true asset that never loses value. That's why I still read hours a day, even at my age. Because every page compounds. Every idea expands. Every mistake avoided lengthens my runway. That's authority earned, not assumed. Wisdom compounds across time. If I could summarize my entire philosophy in one line, it would be this. Wisdom compounds when you align your behavior with timeless principles. The Stoics knew it. Buffett proved it. And I lived it. Wealth is not built by chasing what's new. It's built by mastering what never changes. Patience, reason, humility, and endurance. And once you internalize that, the market, the economy, and even luck lose their power over you. You stop asking, when will I win? And start asking, how long? Can I survive? What NOTA? Because in a long enough timeline, survival is success. You now understand the principles, the proof, and the pattern. But understanding isn't mastery. Mastery begins when you turn wisdom into imagery, when you make abstract ideas unforgettable. That's what we'll do next. Because to make wealth wisdom last, we need to build the analogy ladder, turning logic into vivid, living metaphors that stick to your mind like truth itself. People remember pictures, not paragraphs. That's why I often teach through analogies, because the human brain forgets logic, but it never forgets a vivid image. If you can see the truth, you'll live by it. So let's turn the mental models of wealth into visual laws, pictures that stay with you long after this lesson ends. 1. The garden of compounding. Think of wealth like a garden. The seeds are your ideas. The soil is your discipline. The sunlight is time. If you plant too many seeds, none will grow. If you keep digging them up, they die. But if you water them patiently, the roots strengthen unseen until one morning you wake up surrounded by growth you didn't even notice happening. That's compounding. It rewards caretakers, not gamblers. The poor chase new seeds every week. The rich protect the ones they've already planted. Compounding doesn't look impressive daily, but it looks miraculous yearly. That's why most people never harvest. They quit during the invisible phase. When you understand that silence in your garden is progress, you've already joined the top 1%. 2. The fire of inflation. Imagine a small campfire that represents your wealth. Every spark of earnings you add makes the fire grow brighter. Now imagine a silent wind called inflation, invisible but always blowing. If you don't feed your fire faster than inflation consumes it, your light fades slowly and you won't notice until darkness sets in. Most people don't lose their wealth in crashes. They lose it in comfort. They let inflation eat their fire while they sit warm, telling themselves stories about safety. The rich don't fear inflation, they understand it. They build systems that feed the fire automatically, using productive assets that outgrow the wind. Every dollar must be put to work or it dies of financial entropy. 3. The mirror of envy. Picture yourself walking through a hall of mirrors. Every reflection shows someone richer, happier, younger. You start adjusting your posture to compete with reflections, not realizing that you've stopped walking forward. That's envy. It turns progress into paralysis. It's not just a sin, it's an attention trap. Every minute you spend staring at others' reflections is a minute stolen from compounding your own path. The rich understand that envy is the tax you pay for losing focus. So they smash the mirror, walk straight, and let time reflect their results. 4. The bridge of patience. Imagine standing on one side of a canyon called short-term chaos. On the far side lies long-term wealth. Everyone wants to get there fast. So they build rickety bridges, quick trades, shortcuts, gambles. The bridges collapse. They fall, rebuild, and repeat. But the wise build one slow, solid bridge, plank by plank, decision by decision. It takes longer. It looks boring. But once finished, it never collapses. That bridge is patience. It doesn't just connect you to wealth, it connects you to peace. Because once you cross it, you realize the thrill of the crowd isn't worth the stability of the structure. 5. The bank of behavior. Every day, you make deposits and withdrawals in an invisible account, your behavior bank. When you act rationally, you earn compound interest. When you act emotionally, you pay penalties. Most people overdraft their behavior account daily. They react to noise, news, and novelty, borrowing calmness at 0% interest. That's why I often say the rich get richer not because of their money, but because of their behavioral margin of safety. Your behavior, not your income, decides your destiny. Treat every rational choice like a deposit. Protect those deposits. Let them grow in silence, because the interest on good behavior never stops paying. 6. The iceberg of wealth. What people see, cars, houses, luxury, that's just the tip. Below the surface lies the part that actually keeps it afloat. Discipline, restraint, and simplicity. That's the 90% no one sees, and that's why they keep sinking. The poor build tall, not deep. The rich build deep, not tall. If you want wealth that survives storms, dig deeper, not flashier. Remember this: the part of your life that others can't see determines whether the visible part survives. 7. The compass of rational thinking. Imagine you're sailing in a fog-covered sea. The winds are emotions, panic, greed, excitement, fear. They blow you in every direction. Without a compass, you drift endlessly. But if you have one, if you have a mental model that points toward long-term truth, you'll reach land, no matter how strong the storm gets. That compass is rational thinking. It doesn't remove risk, but it prevents chaos. Every time you align with first principles truth, patience, inversion, your compass resets to true north. The rich sail slower but straighter. The poor chase every wave until they drown in noise. 8. The pyramid of judgment. Picture a pyramid with 3 levels. At the base is knowledge, facts, data, and ideas. Above that is understanding, context, and connection. At the top is judgment, the rare ability to know what not to do. Most people never climb past knowledge. They confuse information with intelligence. But wisdom compounds at the top, not the bottom. That's why I've spent my life building judgment instead of opinions. A mind that compounds knowledge may get rich. A mind that compounds judgment stays rich. 9. The lighthouse of long-term thinking. Every storm at sea looks different until you notice that all lighthouses shine the same. That's how long-term principles work. They don't change with the weather. The beam of logic cuts through every storm of hype and hysteria. When others chase signals, you stay anchored by structure. That's why I call long-term thinking the lighthouse of clarity. It doesn't stop the storm, but it prevents you from losing direction. If you hold to your lighthouse, compounding becomes inevitable because you're guided by what lasts, not what trends. 10. The factory of compounding decisions. Think of your mind as a quiet factory. Each day, you can produce one of 2 products: rational decisions or emotional mistakes. If you run the factory consistently, the rational output compounds into mastery. But if you let emotion take over production, you'll flood your system with defects. The rich maintain quality control. They don't allow one bad day to ruin a decade of output. That's how Berkshire Hathaway works, not as a trading machine, but as a decision factory. Every output is built to survive the test of time, the ladder of understanding. Each of these analogies forms a rung in your analogy ladder. The more vividly you climb, the more durable your understanding becomes. Because logic tells you what's true, but analogy makes you remember it when it matters. That's why I use imagery to make invisible wisdom feel physical. You can forget the numbers, but you won't forget the pictures. The garden growing in silence, the bridge of patience, the iceberg under the surface, the compass that points to truth. Each one is a visual rule you can live by, turning imagery into identity. Now that you can see these ideas, the next question is, how do you make them part of who you are? Because it's one thing to understand compounding, it's another to embody it. The next step isn't about analysis. It's about transformation, building an identity shift so deep that rational thinking becomes instinct. That's where this journey ends, and your real wealth begins. When I look back at a lifetime of decisions, the ones that built fortune, and the ones that nearly destroyed it, one truth stands above them all. Wealth was never the goal. Clarity was. And once I found clarity, wealth became the side effect. That's why the final stage of compounding isn't financial. It's psychological. It's the point where rational thinking stops being a strategy and becomes your identity. You stop trying to think like the rich. You start thinking like someone who can't think any other way. That's what I call the identity shift. Becoming, not performing. You can't fake rationality. You can't perform patience. The market and life will test both until they're real. At first, wisdom feels external, like advice you're borrowing. You quote it, imitate it, repeat it. But over time, if you live by it, something changes. It fuses into your instincts. You stop asking, what would Charlie do? You start asking, what would my future rational self expect me to do? That's when you've crossed from imitation to embodiment. And embodiment is where compounding accelerates. Because now, your mind compounds automatically, every choice feeding the next one, every calm decision multiplying itself across time. The emotional equation of freedom. Let's put this in human terms. Wealth, at its highest level, isn't numbers, it's peace. Every rational decision buys back a little piece of your peace. Every avoided mistake gives you more mental silence. And that silence, that absence of chaos, is the sound of freedom compounding. The rich aren't different because of their assets. They're different because of their emotional structure. Their peace isn't purchased, it's earned. Their calm isn't confidence, it's competence repeated thousands of times until fear lost its leverage. That's what you're really building here. A system where emotional noise can't control financial destiny. From wealth to wisdom. When I talk about wealth, I'm not talking about yachts or private jets. I'm talking about autonomy, the ability to live by logic, not panic, to think clearly when others can't, to wake up each day knowing that you own your time, not the other way around. Money without autonomy is decoration. Autonomy without wisdom is danger. But wisdom with autonomy, that's freedom. And freedom is the final dividend of compounding clarity. You don't chase it, you grow into it. It's the inevitable result of a mind that stops fighting time. The rational identity, if I could hand you a mirror that reflects your financial future, you'd notice something striking. The people who win aren't the ones with perfect timing or secret opportunities. They're the ones who look calm when everyone else is loud. They act slower, speak less, and decide deliberately. They don't need to appear smart, they need to stay sane. They don't pray for luck, they pray for endurance. That's the rational identity. Stoic in emotion, simple in logic, relentless in patience, immune to noise. Once that identity takes hold, your results stop fluctuating with luck. They start stabilizing with reason. And that's the transformation I want for you, to stop reacting like an investor and start existing like a thinker. Because thinkers survive. Speculators fade. The legacy of clear thinking. One day, the money will fade. The businesses will pass to others. But clear thinking, that outlives you. Every rational decision you make becomes a message to someone who hasn't even been born yet. You're teaching them silently how to survive chaos with dignity. That's what Buffett and I really built, not a portfolio, but a philosophy, a blueprint for clear thought that any generation can use. So, if you want to honor what we've done, don't memorize our quotes. Practice our patience. Apply our inversion. Guard your clarity as if your life depends on it, because it does. Full circle, the law of the few. By now, you know why 90% will never be rich. It's not intelligence, access, or timing. It's impatience, the quiet disease of modern life. But you're not most people anymore. You've seen behind the curtain. You know that wealth is a mirror reflecting mental discipline, not monetary luck. You've joined the few who can see slow progress as victory. And once you can see that, you're already rich because your thinking has crossed the point of no return. The rational path, once seen clearly, can't be unseen. The retention loops stay in the game. Before we close, let me leave you with a loop, something that keeps the compounding alive. Whenever you feel impatient, whisper this: compounding hasn't stopped, I just can't see it yet. Whenever you feel behind, remind yourself, time is working harder than I am. And whenever you doubt your path, remember, if I avoid stupidity long enough, clarity will make me unstoppable. That's your retention loop, a mental circuit that feeds itself with truth instead of emotion. Keep it alive, and no external chaos can break your trajectory. The lesson, my friend, is simple but final. Wealth doesn't belong to the clever. It belongs to the calm. It rewards those who respect time more than trends and truth more than excitement. Now you understand the framework. You've seen the math, the mindset, and the metaphors. The next step isn't learning more, it's becoming less reactive. Because the day you stop being swayed by the crowd is the day compounding finally starts to serve you.